In this video, I'm going to talk about how to account for franchise fees. So let's say that you start a DJ business called Disco DJ, and you do weddings, you do bar mitzvahs, and you do a wonderful job, so much so that people want to start their own Disco DJ. And so you decide to franchise or basically sell franchises to people where they can use this name Disco DJ. All right. So in order for somebody to get a Disco DJ franchise, they have to pay a franchise fee. And so the upfront franchise fee will be $100,000, right? So to do anything, they're going to have to pay $100,000, and then let's say there'll be a 2% royalty. Maybe they have to give 2% of sales thereafter, right? So if they make $100 in sales, they have to give you $2, right? So there's a franchise fee of $100,000 and then 2% royalty thereafter. And so now you, as the founder of Disco DJ, are trying to figure out, well, how do I account for this $100,000 of revenue and this 2% royalty? When do I recognize these things? So what we need to think about with this franchise fee is the following. How much of this $100,000 is just for them to be able to use the Disco DJ name, and how much of it is for some services that you are going to provide to the franchisees? For example, you might say, okay, I think that $50,000 of this is just for the name, just for the rights to the name, to use the name, use name. But then you're also going to say, you know what, there's another $30,000. $30,000 of this has to do with, I'm going to do some training. I'm going to train you how to be the best Disco DJ you can be. So that's going to be involved with training. That's beyond just saying, yeah, you can use the Disco DJ name. And then I'm going to do $20,000. I'm going to provide support. So maybe like some website support or something like that. After you've been trained, after you're ready to go, maybe your first year in business, I'm going to be there to kind of hold your hand and help you as you enter the DJ business. So now we've seen that we've broken out this $100,000 in the franchise fee. It actually comes out into these different parts, right? Because usually the franchisor, right, the person who's selling the franchise, is not just going to give away their name and then just walk away, right? Usually there will be some kind of training or support or something like that, right? So now, when you think about this revenue, when somebody buys that franchise from you, right? So they buy the franchise, you're going to receive $100,000 cash. So we'll debit cash for $100,000. But then we're going to have unearned revenue. So this unearned revenue, and I'll call it unearned franchise revenue, whatever, of $50,000 that we're going to credit. And then we're going to have earned revenue, just abbreviating some of these things here, of $50,000. So as soon as you give them the right to use your name, you've earned that $50,000, right? Because you don't have to do anything else. Now with the training and the support, though, we say unearned revenue because when you get the cash, when you receive that $100,000, you haven't actually done anything yet in terms of the training and the support. That's going to come later. So now, let's say that you've done the training. Like after, let's say this is 6 months down the road or something like that, you've done the training. Now you debit unearned revenue for $30,000 and then credit revenue for $30,000. Okay, and this is, let's say this is after 6 months or something like that. Okay, this is just an example, right? Don't think it's always 6 months. Whenever you've done the training, right, then you're going to recognize the revenue respective with, or that deals with the training. The same for support, right? The same for support. So let's say after 1 year, let's say after 2 years, you've done all the support that was needed. So now you recognize unearned revenue for $20,000, and then revenue for $20,000. And of course, all this is from the perspective of the franchisor, right? You started this, you sold the franchise. Now you're saying, how do I recognize the revenue from that $100,000 that I got from that franchise fee? So that's really key, is how you divide up the franchise fee. But don't forget, there's a royalty. There's a royalty after that. So let's say that the royalty is set up in such a way that these franchisees, or this franchisee pays you 2% of sales. All right, 2% of their net sales or something like that. And let's say that their net sales were $100,000. So then they're going to pay you. So let's say it was 100,000 times 2% royalty. That will give us 2,000. So then at the end of their first year of business, we calculate this out and see, oh, we're owed a $2,000 royalty. So we're going to debit cash or accounts receivable, whatever, for 2,000, and then we can credit revenue or franchise revenue, royalty revenue. Somehow we're going to credit revenue for 2,000.